Welcome back to another video, guys. Today I'm going to be breaking down some of the most essential things to look for within my model, at least, and the way I trade, and try to break it down as simple as possible. And I'm going to be addressing one of the most important questions first: when to stay out, meaning when not to trade, right? And when do I not trade? When we're consolidating. But what does price look like when we're consolidating? For me, it's having failure swings, meaning that it's swing points close to another one, right? You can see how none of these manipulate the high up here. So it's all failure swings, which we have up here at the highs, and we have failure swings at the lows. So that's something I will not be trading in. We can consolidate for a few hours. It can be a few days. No one knows when we're going to take out either the external low or the external high. But in this case, I'm just going to be patient and wait for either of these external swing points to be taken out, right? And when do we trade? I'm going to break down when do I trade and how we get on side now. So looking at protected swings, if you guys don't know what a protected swing is, it's essentially another word for manipulation, right? So when we manipulate a relevant swing here, especially when we have failure swings down here, we go to manipulate the external low here, which is a relevant swing point. And once we come back into the range and get a change in state of delivery, meaning that if it's, the low here, we need a close above the series of down close candles that made the low and took the liquidity, and vice versa. If we were to manipulate the high, we would need a down close candle to close below this series of up close candles that took the high. And once we have that, we can then look to get on side if there's a potential for decent risk to reward up to a potential target above, right? And ideally, we want to be trading towards failure swings as they tend to be low resistance liquidity, meaning that price is in a hurry to get there. So when we see failure swings on both sides like this, and we take one side and get a change state of delivery, that's when we'll definitely looking to get on side, at least up to this external high, as price usually hurries to get up there. So we don't necessarily need to sweep a relevant swing on the asset we're trading. We just need to see either the asset we're trading. So if we're trading NQ, we need to see NQ sweep the low or high, or ES, right? That's SMT. So let's say we're looking to trade this asset, but it's just consolidating here, right? We don't want to get on side. But if ES, a correlated asset over here, were to take that low and then close above, giving us that change state of delivery here, then we would be okay to look for longs here on this asset, right? Since this is not a failure swing anymore, because we manipulated on a correlated asset. So you don't necessarily need to see both assets manipulate. And how do protected swings look in continuations, right? In this example, we're obviously bullish, price is going up, and this could be an overnight session or something else where we're just, consolidating a bit. Then we would love to see some sort of new protected swing created that we can trade away from. So in this example, again, it doesn't necessarily have to be like this. It can also be an SMT with a correlated asset. But once we're getting that protected swing, ideally near a driver, which could be 8:30 news or 9:30, which is indices open, right? That's where I take most of my trades, since that's where most of the volatility is as well. Then we're looking for that, confirmation of the reversal or continuation again by the close above the series of down close candles that creates the low. And manipulate the low here. And talking about the daily candle, ideally we want to see the daily candle not have too large of an opposing wick, because the daily candle can only expand so much. So if we need to go like 300 points down on NQ to manipulate some sort of relevant swing, and then we're looking for it to expand after, the likelihood of that happening is just not very high. So we want some sort of small wick on the daily candle. The smaller the better. Just some sort of small opposing manipulation, right? And then we're looking to trade the expansion, which I'll get to in a second. So how do we identify the reversal on the lower time frames? This is one of my go-to setups and one of my go-to signatures on the lower time frames, being that we have some sort of higher time frame key level. Could be an hourly, daily swing. Can even be, yeah, it's really just a swing point in most cases, where if we go to manipulate that near a key time of the day, usually 9:30 or 10 a.m., since that's where most of the volatility happens, then we're looking for that manipulation in terms of a sweep here, preferably just a wick, or the SMT again, which I mentioned a second ago. And then we're looking for that close to happen, right? And on this, I generally don't drop lower than a 3 minute. I know this says M5. That's my ideal signature after 9:30 on the 5 minute. But don't drop to like 1 minute and 2 minute and try to force it. That's just not worth it. And you're probably gonna get chopped up a lot of the times either way. So with that said, how does reversal look on a continuation day? A bit like the protected swing I mentioned a second ago. If we reversed on the hourly, the day prior, right, we get that change state of delivery. And if we have an opposing draw on the higher time frames, which could be failure swings, on the daily up here or something like that, and we're consolidating in the overnight session, we want to see some sort of, low that's, we have failure swings here again, right? That's not something we want to be trading away from. So we're waiting for some sort of manipulation, which could occur here near the open. And then we're looking to get on side with that expansion, right? And you can see again here, we open up here, trade a bit, and then we have that trading that lower wick on the daily candle, which is ideal to not be, ideal to be a small opposing wick and then, expand. All right, going into the expansion itself, right? How do we get on side with this? So obviously we're waiting for that reversal we just talked about to happen. And then personally, I'm just using opposing close candles. So once we have identified this change state of delivery, if the risk to reward looks good to, the opposing draw we have, then I'll usually just get on side on the reversal. So enter like here on the close above, put my stop at the protected low, or at least anticipated protected low, and then target the other side of the range. Could scale along the way depending on how far it is, right? So with that said, you can also look to get on side on the continuation signature, which would be some sort of opposing close candles, ideally into another PD array, which could be a fair value gap as illustrated here. So once we close above up here, you can either market order in or you can wait for that retest to happen. It's not always it happens, so usually I'll just market order in, depending on the risk to reward up to the opposing draw, right? And some of the most common expansion signatures is that we displace through old highs, which is illustrated here. We create a new high, we retrace. When we get back up to this high, we displace, creating imbalances here, right? And then again, we have a retracement. We create a small high here. We just expand through. And again, if we have failure swings on the other sides, that's really what we want to be targeting. And obviously, we want price to respect opposing close candles once we close through them. So when we get this close up here, we don't want to see price return back down to this low. That would kind of invalidate the idea that we have. And we want to see a quick reaction away from the reversal, like price is in a hurry to get somewhere. And we don't want to see it, just chop around for 2 or 3 hours. That's not very ideal. Obviously, it doesn't always go as clean as this. We all know that. but that's the idea. And then you can get small opposing sweeps here, which creates a new protected swing. So once we get that sweep here, and you close up above here, you can trail your stop to this low if you want, as this should be a new protected swing that we should return back down to. So now I'll be going into a few examples I took from the charts, a few examples on NQ showing how it's actually, playing out on the real charts. This is the first example on NQ, Nasdaq, where going into this day, obviously I don't know, we haven't manipulated either side, and we have had an inside day here. So I'm just gonna mark out the external ranges, which is the high of this candle and the low of this candle. And then I'm just gonna wait to see where price is engaging. Dropping down to an hourly time frame, you can see that we have failure swings up here at the highs. We don't have so many at the lows, we have some here in between at the equilibrium. So we're just waiting for price to engage either the external range high or the external range low. And what happens? We take the low. Down here we want to see how price reacts, if we can get back into that range and then get a confirmation that it's a reversal and we can look to trade towards the other side of the range. So here you can see I marked out the hourly change state of delivery, but it's still a bit prior to 9:30, so personally I'm just gonna wait. So this is 9:30 coming in. You can see that we create some lows on the lower time frame. This is the M5 on NQ. With that said, we go to sweep these lows and return back higher, closing above the down close candles here, right at 9:30 at a key level. So that's what we love to see. Can either enter, just market enter here, and then put your stop below the protected swing, and then target the opposing side of the range, which would be those failure swings showed on the hourly, right? That's how I go about, entering intraday on my own accounts. And then ideally, this is not the best example, but if you have some sort of opposing close candles that are near the lows, like in between here, that's when you can get on side for the continuation. This didn't offer the best continuation since you want to see some sort of bulky opposing close candles, so this is not very convincing to enter up here on the close above this candle. With that said, we did reach the external high the same day, just a bit choppy in the afternoon session, but nonetheless, we, even if we trailed our stop to break even, we should not return back down here. So just letting the trade play out, and what I usually advise is just set and forget, which is a method where you set alerts on TradingView at your target or at like 2 hour where you want to scale or trail your stop, and then at your stop loss, and then you can walk away. Because I know a lot of people deal with trailing their stops too tight and mismanaging their positions, when in reality their plan is it's very good, but they're just not sticking to it, and it would have ended up hitting the target they had in mind. And I'm gonna go talk about this second example, also on NQ, which this is the daily. It's a bit more messy, but I'm gonna show you how I approach it. So going into the hourly, we can see that we have clear failure swings here, down at the lows, right? Failing to manipulate the low here, and then more lows here. And we're not really getting any significant reaction away from the highs. So that said, I'm not really looking to trade to the upside here, because obviously we have a bunch of failure swings here, but I'm not really getting any actionable signals from the highs as well. So I'm just staying out. And then here going into this day, this is the hourly on NQ as well. So going into this day, we drop down to take all these failure swings that we have down here, and we're waiting to see what kind of reaction we get down here. And what's the reaction that we get? We go to manipulate this low. This is the M15 on NQ. You can see it in the top. We go to manipulate this low. We get an M15 close above. I believe this is 930 as well, right around here. So that's usually where the moves happen. We get that confirmation. We could enter with, just on the close of this candle with the stop at the lows and the target up here. But even the risk to reward wouldn't be that good. So, and it's a bit aggressive considering that we already moved quite a lot on the day. So it's not completely ideal. But seeing this continuation signature is a bit more convincing, especially because we sweep some sort of relevant swing first. And then we get, the close back through. So this should be act as a protected swing. So this is a way better entry in my opinion, where I would just mark it in here on the close of this, so on the open of this candle, put my stop at the protected swing, target this external range as the first target, and as you guys can see, you can't see it here, but we are in a daily trend, in the bullish trend on the daily, so you could, hold some runners and then scale out along the way. This would be around 4 all the way up here. So obviously price just expanded displaced through those highs, which is what we want to see. So thank you guys a lot for watching, and I hope you enjoy it, and let me know what you want to see next.